We're much higher than that. I would say closer to 80%. And that's because the level of uncertainty that we're seeing is so significantly high. I mean, it is higher than the global financial crisis. It is higher than when the US debt was downgraded in 2011, and higher than any previous recession going back to the 80s when this index was created. So we think that that means that there is a significant reduction in capex. We hear that from our clients. We also are starting to see signs that you're seeing discretionary spending pull back on the part of consumers. And of course, that leads to a vicious circle where you see fewer and fewer jobs growth, eventually a negative jobs print. And so our baseline forecast is for negative 0.1% growth for all of 2025 for the US.
So considering that picture you're painting, Constance, it doesn't look like a very optimistic one for the U.S. economy. I wonder what you made when President Trump yesterday spoke on True Social about the calls for preemptive cuts from the Federal Reserve. He obviously thinks interest rates need to go down now. Is there a case to be made for that view if there is indeed such a dour outlook ahead of us?
Well, as Mike McKee pointed out, and we've been saying, the U.S. is going to import inflation and export disinflation, deflation to the rest of the world. And so I think what we're seeing from the president is perhaps the setting up of a scapegoat or someone to blame, saying, oh, well, we wouldn't have this slowdown in growth if the Fed just acted sooner. And of course, whatever happens, we will never have the counterfactual. But we do know that if the Fed were to cut too soon, it would risk igniting inflation. We think that risk is somewhat mitigated because of what we're seeing in terms of the behavior of the 10-year rates, right? Even with Scott Bessent's comments today, we don't see the 10-year rallying all that much. And so if the Fed were to cut too soon, right, and that risk of inflation gets elevated, you're going to see 10-year rates go up. So it's not clear that that would actually help the economy that much, where it really could serve to unanchor inflation expectations. So we think not only is the Fed going to be so-called fashionably late, but we think given their dual mandate, they are constitutionally, or I should say congressionally mandated to be a little bit late, and they're likely not to cut rates until June or so.
Constance, you mentioned Scott Bessent's remarks earlier today prompted quite a rally. I just wonder what you make of what he said. Wall Street is finding a positive spin on this. The status quo here apparently not sustainable. But if the Treasury Secretary is calling for de-escalation, does that mean that the reciprocal tariffs didn't work?
Well, that's an interesting question. I mean, I would say it depends from whose perspective and how are we define working, right? Like if you're China and and this is going to really hurt your economy, and you've put on retaliatory tariffs, and now the U.S. is saying we're gonna walk back some of our side of the tariffs, then I guess from China's perspective, it did work. From our perspective, did it work? What are we trying to achieve? You know, there's been a lot of muddled communication with regard to what are these tariffs trying to achieve? Are they a revenue generator? Are they supposed to reduce imports and reduce our deficits, in which case they would not be generating as much revenue? Are they supposed to bring manufacturing back to the United States or bring manufacturing to the United States? It's not clear that is necessarily one of the goals. And if it is, we import so many intermediate goods that are part of our manufacturing process that tariffs are not really going to help facilitate that occurring. Is it a Juan Perón type policy where we're saying we actually want to make everything in the United States and we're not going to be integrated with the rest of the world at all? We know that's not a terribly successful policy track to take. So it's kind of unclear when we say work, what is the ultimate objective of the tariffs, and what is the ordering in which we should rank the various objectives that have been thrown out by the administration?
Constance, we just have a minute left here, but when you look at the bond market right now, what do you see and how worried about it are you?
I see an increase in term premium. I see the sell-off as being part of a global reallocation out of US assets. And what we see day to day, of course, is the liquid assets. But we're also going to begin to see, and we are already beginning to see in terms of real estate, the selling of less liquid assets. And so that increase in term premium is going to prove, I think, very expensive if we continue along this direction.